I'm still seeing downside in Bitcoin, potential for 12, 13,000, potential for 9,000. That's part of this bigger bear cycle that we're in.
Gareth Soloway, a seasoned trader, has carved out a prominent niche in the finance and investment sphere, earning a well-deserved reputation for his deft trading strategies and unwavering commitment to excellence. In this video, Gareth will deep dive into the most pressing topic in today's market, where he will reveal at which point he sees the Bitcoin bear market rally. As Soloway shares that he stays bearish versus a suspect, when he analyzes the charts in terms of whether or not the bull market is back in Bitcoin, while still favoring a bear market until Bitcoin goes above $30,000. Additionally, Soloway believes that Bitcoin in a bear market can hit as low as $12,000 or $9,000. According to Soloway, if Bitcoin stays above $30,500, the market can anticipate prices going up. It will either be make or break level. As Soloway said, I do believe it becomes that asset in the future once we get regulation in there. But right now, that's not the case, even though it's showing glimpses of what it wants to become. Bitcoin could experience a significant surge in value if it manages to break through a crucial level, potentially leading to a target price of $29,975. Furthermore, if the bullish trend persists, Bitcoin may aim for the psychologically significant $30,000 mark. Soloway mentioned in his previous interview that I would say you got to give it another 3 years or so. We got to get through this area. We need transparency with regulation. Investors need to know if their money's safe. As per data, 90% of viewers do not subscribe to the channel. Please make sure to hit the subscribe button below for more recent updates.
If we look at the Bitcoin chart very clearly here, you're in a range, 30,500, which, by the way, I told you guys for the last month, for the last 2 months, we could get up there. That's your max upside in the near term. That's exactly where we got to over here. We pulled back to the low support of 27,000. We went up. Now we're hovering here. Which way breaks? That's what I'm watching. As a technician, it's which line breaks. Do we break to the downside? Do we break to the upside? Whichever way we break, that's the way we're going to continue in the near term. A break of 27,000 sends us to 25,000. All right, a break of 30,500. There's this upsloping trend line right here. We would go attack that probably around 32 to 33,000. All right, I'm still favoring the downside. I still think this is a bear market rally. If we look at 2018-19, you had multiple 100% rallies of 3,500, even as much as a 200% rally, and ultimately we still went down and retested 3,500. So I'm not buying it yet. I know the masses would disagree with me. That's okay. That's been my life story with making big calls. The masses disagree. We obviously know the outcome of those.
Coinbase's staking platform has endured a $367 million net outflow of staked ETH since April 12, as withdrawal requests, including reward withdrawals and full exits, outpaced new deposits, according to a Dune Analytics data dashboard. Ether slipped below the 1,900 level after a month of strong performance. Previously, the network saw its price rise to $2,127 after its successful Shanghai upgrade. The Federal Reserve decided to raise its benchmark interest rate by 25 basis points on Wednesday. While Bitcoin was slightly down prior to the Fed's move, it clawed back losses and settled around $28,634, according to CoinGecko. Ether reversed course as well, pushing higher on the back of the Fed's statement to $1,886, a gain of 1.2% in the past day, according to CoinGecko. Naturally, such an overheated market can see the price go in either direction, meaning that both increases as well as declines in the asset are possible with this volatility. So far this year, Bitcoin and Ether have notched gains of roughly 70% and 50% respectively.
All right, lastly, I want to just look at Ethereum here. Ethereum, you can see had the big pop above, then we came right back below this trend line right here. We retested, we're now coming down. There's a new trend line to watch in the near term on Ethereum. If this line breaks right here, okay, and I'm going to drag that out. You can see that line right there connects through this low and this low. If that line breaks, and notice it's a parallel with the one above, parallel lines are really important in technical trading, then you're headed down, likely a stopping point around 1,700, and then ultimately 1,500 would be your next spot. All right, so again, on the upside, your $2,125 is your resistance. That's your double top. That's your high pivot. That's what you're watching for. However, all right, I have gone long and short Bitcoin 100 times in between the bull market top and where we currently are, long and short. In fact, more trades on the long side. Because again, a good trader, you're neither biased to one side or the other. You trade the freaking levels. That's all there is to it. If you have support and it's a multi-factor support, you buy the support. All right, you get the bounce, you exit, you say thank you very much. If it hits resistance and you have a multi-factor short signal, you short it and make money to the downside. That's how you make 100 times more than these hodlers that go long and just forget about it. Yeah, sure, they'll wake up with a nice chunk of change. I will have 10, 100 times more than that by the time I get to that same point by trading the levels. All right, that's just the facts. The charts show it, the returns show it.
Unlike cryptocurrencies like Bitcoin and Ether, central bank digital currencies are not decentralized and are instead backed by the reserves of the central bank. Depending on the design of the issuing central bank, CBDCs can be account-based or token-based. With a more regulated and centralized approach to digital currencies, CBDCs may attract users who are hesitant to invest in cryptocurrencies due to their volatility and lack of regulation. However, CBDCs could face competition from existing cryptocurrencies. According to Soloway, the launch of CBDC by the U.S. government could prompt the unveiling of new crypto regulations within the week.
Go to Bitcoin. We're going to talk crypto. But the bottom line is, and no one else is talking about this, but I'm here to tell you that the decision by the judge in the Ripple case is already been made. It has already been made. It was probably made 6 months ago. The U.S. government is not allowing it to be made public. The U.S. government is not giving any clarity on regulation to Coinbase. That's why Coinbase is suing the SEC and threatening to leave the country. Why is the government doing this? The answer is this. The government is doing it for the same reason China did it. All right, now you might be saying, what the heck, China? China's doing the same thing? And the answer is this. Remember back when China basically banned Bitcoin? Why did they do that? Because they were launching their CBDC, the digital yuan. They wanted the digital yuan to get a foothold in transactions and be the king, be the top player in the CBDC, in the digital currency realm. Now that the digital yuan is being used actually as a reserve currency in trading, but with some of China's partners, they're now opening the doors to Bitcoin again. China's smart, all right? Whether you agree with them or not, they're smart. They understood that they had to make sure that the CBDC, the digital yuan, had the foothold. The U.S. government is essentially taking almost the same play structure and essentially saying, okay, we're not going to ban Bitcoin, but we're going to keep things so fuzzy in crypto until we launch our CBDC so that our CBDC will be used by big institutions and ultimately be used by the masses over a lot of these other digital currencies. That's the game plan right now. I'm going to tell you straight up, this show is called The Game Plan. That is what's going on. Once we get the CBDC to be launched, I guarantee you that within a week, a month, you will have regulation on crypto unveiled, the Ripple decision will come out, all that stuff.
Soloway has cautioned that the recent surge in Bitcoin, Ether, and other crypto markets at the start of 2023 is likely just a bear market rally. It has also emphasized that cryptocurrencies, including Bitcoin, are speculative assets that can experience substantial price fluctuations. Soloway believes that for Bitcoin to indicate a bull market, it must surpass the $30,500 mark. On this note, we conclude our video. Do you agree with Gareth Soloway's perspective about Bitcoin and Ether current performance? Share your thoughts in the comments section below. If you found this information helpful, then like this video and subscribe to our channel. We will bring you more updates in the future.